All right, good morning, everyone. It is 9:05 in the morning of April 29th, 2022, and this is my pre-market strategy session. Today I'm starting off with the 10-minute chart on Amazon. You can see here Amazon reported after the bell yesterday, right at 4 o'clock, and really it took a big hit. And this is the consumer discretionary part of Amazon that caused this. There are a lot of aspects to Amazon's earnings reports, and a significant number of them were quite impressive, really. But it's the consumer discretionary portion of Amazon that missed, and so here it is, pre-market. It's down 10% right now, pre-market, and that's an enormous move. I think that this is somewhat of a I don't know what you want to call it, sort of a wind vane, and I think the sort of the season, the economic season that we're in, is going to bring a sustained period of weakness for consumer discretionary and names like Amazon. Although in Amazon's case, this is my opinion, that in Amazon's case, this is probably a temporary setback. Now, what I mean is that I think that this could continue for the next couple of years. Maybe not, straight down, but maybe gently sloping downward. There are a lot of economic concerns, with everything from, the strengthening dollar, which is going to hurt the emerging markets, which is where a lot of manufacturing is sourced for Amazon and stuff. And when businesses overseas go out of, when businesses overseas start to fail, the emerging markets start to fail, that makes it tougher for imports into the United States. And there are a lot of things that are going to just kind of create a lull in the price for Amazon and Amazon's business. But I think it's temporary, even though, a year or two may not sound temporary. I think looking back on Amazon in 30 years from now will be equivalent to looking back on Berkshire Hathaway, from 30 years ago. Berkshire Hathaway, the way Bezos is running Amazon is very similar to the way that Warren Buffett has run Berkshire Hathaway. And so although there may be a sustained period of weakness for Amazon here in the near future, I think that it's probably a good time, or we're coming up on an opportunity to begin averaging into, if there's anybody that's missed these incredible moves on Amazon, when price starts getting back down in here in this area, then it's probably a pretty good time to start averaging into Amazon again. I believe that in 30 years, Amazon will be a behemoth, and Jeff Bezos will be giving talks in the same fashion that Warren Buffett does. So then, let's see what's next here. Pardon me, I'm moving my microphone around a little bit. Sorry about that. Tesla. So here's what's going on. Here's the way I'm seeing Tesla right now. Let's expand this out a little bit. So there's this downward trend on Tesla, and here's the bottom of that trend, and here's the top of the trend. And there are three tags of this trend: the top end right here, and then right here. And I didn't take the opportunity to short Tesla right here. And as it turns out, it really was a trustworthy touch on the top end of the range right here that is sloping down. In my opinion, Elon Musk did sell really close to the top on Tesla right here, and he did some more selling recently in order to finance his purchase of Twitter, and who knows what else, However, what it looks to me like is going to happen is, there is some price consolidation that happens right in this zone. So I wouldn't be surprised to see the same duration. Let's see, that's from the end of January until the middle of February. So 3 or 4 weeks of consolidation here in price in this zone it seems to me like it's likely to happen. However, I think that given enough time, the downward trend on Tesla will continue. Just because, although Tesla is growing, it's amazing. Tesla is an amazing electric vehicle company, and really, and it's the pioneer too. Just opened up a factory in Germany and Europe. There's of course the United States, where he expanded into Texas. I think they've got something going on in Australia and in China. It's an amazing company. The competition is starting to catch up in electric vehicles. So Tesla is extremely valuable. Let's see here. The price to earnings is 119. And I've forgotten what it is for other auto manufacturers. If you look at Porsche, BMW, Ford, Chevy, so on and so on and so on. Their electric vehicle sort of divisions are just starting to catch up to Tesla, and their price to earnings ratios are significantly lower. Actually, let's just go ahead and look at Ford real quick. Let's look at Ford Motor Company's price to earnings, 3.35. Let's see, what's BMW? Let's see if I can Bay Motoren. I don't know. Maybe that's German. On the Exeter, BMW Industries Limited. That's Mexico. Let's look at this one in Germany. Let's see, price to earnings ratio 4.15. Let's see, Porsche. I have Porsche saved somewhere. Let's see. Let me see my large cap movers. Let's see if I've Porsche in here somewhere. Pretty sure that I do. There we go. POAHY is Porsche Automobile Holdings. Now let's look at their price to earnings. They don't even have a price to earnings ratio up. Who else? GM. Yeah, General Motors. Let's look at their price to earnings. Price to earnings on GM is 6.42. So Tesla being, at 119, there's still room for that price to earnings ratio to come down. Don't get me wrong, I love Tesla. I think Elon Musk is an absolute genius. Then there's just all sorts of things going for this company. A period of softness though for Tesla wouldn't surprise me. And so here's the bottom end of that softness, and here's the top end of the resistance. After a period of consolidation, I'd expect to see this period of consolidation to play out, and then I expect to see it continue downward. So after a few weeks, that's what I'll be looking for. A couple weeks, that's what I'll be looking for. Let's see. Next up, okay, so there's Amazon. Here's consumer discretionary. This is when I want to do anything with consumer discretionary, just broadly speaking, I use the XLY. I'll go more specifically with Amazon because the 15% of the XLY is Amazon. So as Amazon moves, so does the XLY move. And for that matter, same thing with the Qs. You can see here the Qs pre-market, although this is the daily right here, the Qs pre-market are under some pressure. It's back down here to the low end of this area. Now this is the low. Oh, look, we made a new low close over here. This is interesting. Oh yeah. Oh, that's a lower low. So that's interesting. We could see another, if you see this consolidation that happened right up here just only about a week or so ago, and then it fell down. We could see another period of consolidation, and then watch it go back down again. Usually, that's not the way it works, though. Usually, after it breaks down, we'll get a bounce, sort of a relief rally after the move down, and then it continues after a period of consolidation like this right here, like this one. Let me redraw that. After a period of consolidation like this one right here, and then the move down and making a lower close, that's decisively bearish, and there might be a rally up. It might even rally to the bottom end of this consolidation range right here, but the next leg is down. So once it starts breaking below those lows again, it'll be certainly time at that point to short the Qs. Looks like, tech is under a lot of pressure right here. Let's see what else is going on here. The SPY. So the SPY hasn't gone. The SPY is still in correction territory. It's not in bearish territory yet. We'll see. We'll see what happens. It did the same thing actually, though. It broke this this consolidation period right here and went down. So I have this 430.98 marked off for some reason. And it seems to be just sort of a period. It must be an end of month. It must be the end of September, beginning of October. In fact, actually, I think that was let me look this on the monthly here real quick. Get rid of these marks. In fact, I think that was the start of the last big up move. Yeah, there it is. Okay. So this breakup candle right here, closing below the bottom of this breakup candle right here is a big deal. This area down here does represent buying. There is support in this area right here. However, it looks to me like it's going to, what I say fail, what I mean by fail is go down. People tend to equate up with success and down with fail, which, in the general consensus is true for stocks. It's just for traders, up and down, it doesn't matter. Success and failure doesn't matter. What matters is getting the direction right. So in a trading sense, it looks like there's going to be further downside here coming into the future. We'll see what happens in May. May, the whole sell in May, go away thing. Yeah, we'll see. We'll see what happens. Things are definitely looking weak, and it'll probably continue that way. But I don't buy into the sell in May, go away. This range could last. This is a very tradable range, but this range right here could last 6 months. All right. So then let's see. And today, it's hard to say. I love being contrarian because it tends to pay to go the opposite direction as the crowd. However, with a big down day like this, Amazon taking a hit like this, and sort of the market beginning to realize that consumer discretionary, there are a whole lot of headwinds in the economy right now, and the Fed, the Fed is talking about tightening. Even though the Fed is, if the Fed tightens, it'll be amazing. I tend to think that a negative GDP quarter would cause the Fed to put a pause on tightening. But then again, the Fed has a price stability mandate, price stability and employment mandate. And if the Fed doesn't tighten, that means that, inflation starts to go through the roof. And if the Fed's in a tough spot. If the Fed decides, to tighten further, that means, the economy is going to take a hit. So which is it? Peter Schiff, who I listen to from time to time, he kind of has it right with, damned if they do, damned if they don't, as far as the Fed's concerned. But Peter Schiff tends to think that the Fed will sacrifice the dollar and allow inflation to go wild, and that means that they will no longer tighten. I think the Fed can tighten and still see more inflation, because inflation is much higher than the rates that the Fed has set. And I think they can tighten and see the economy take a hit. So it's tough out there right now, as far as really being able to make an economic forecast with any sort of accuracy. But as trading goes, I'm looking for more downside. It's after once the setups present themselves for the downside, then I'm looking for more downside. That's pretty much the side that I'm on. All right, everybody. Actually, and one more thing. I think it's looking to me like gold, the GDX, the miners. It's looking to me like it's trying to hammer out a bottom right here. I'd like to see it fill this gap here first. There are a couple gaps in here, actually. Actually, there's 1, 2, 3 gaps. Here's the bottom end of the risk range on the GDX. And here's the top end. There's roughly, I'm just looking at it, there's roughly 1 to 4, 1 to 5 upside to downside down here. And so I started averaging into the GDX starting on this date right here. And I'm just slowly averaging in. I'd like to see it hit the low end of the range, and then I'd really start stacking up some a large position in options, probably as much as 3% of my portfolio in options on the GDX. Keeping an eye on that. Looks to me like the dollar's starting to pull away from the top end of its range. I think the dollar has a lot higher to go. As the dollar pulls away from the bottom of its range, it's going to help out the gold and the GDX as well. So, I think gold just bounced off the bottom of its range. Yeah, I'd like to see it hang around here a little bit lower for a little bit longer, just because I want the good deal. I want a good deal. I want a good entry on my GDX trade. All right, everybody. That's going to be my pre-market strategy session for the day. Good luck out there. Keep your wrist tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you on Monday's strategy session. Have a great weekend, everyone. I am out.